And speaking of, for the longest time, the USP or the unique selling point of the UAE was its tax-free status. The United Arab Emirates is losing that now. Starting June 2023, corporates in the UAE will be asked to pay a federal tax. Will this force businesses to move base? Will Dubai no longer remain attractive to entrepreneurs? And why is the UAE suddenly introducing a tax after all these years? Our next report has the answers.
It's hard to get this skyline wrong. This is the United Arab Emirates, home to ultra-rich people, ultra-fast cars, ultra-tall towers, ultra-luxurious airlines, and the coveted business hubs. There are at least 3,209 international companies in the UAE. Most of them are based in Dubai. What makes this land a favorable business destination? 1. Taxes. You don't need to pay any. 2. Ownership. Foreign companies do not need Emirati shareholding. And 3. Location. UAE is halfway between Europe and Asia. It's a magic formula for minting money. But soon, companies will be forced to share their profits. UAE has introduced its first ever corporate tax. Businesses will be taxed 9%. This will apply to profits exceeding 375,000 dirhams, which is around $102,000. Corporates whose profits are below $102,000 will not need to pay tax. This is a federal corporate tax, meaning it does not apply to individuals. Just businesses. They will have to start paying tax starting June 2023. This is the first time the UAE is taxing businesses directly. One can't help but ask why. Why is the UAE bent on losing its USP? Maybe to stay in the business. We did some digging. Here's what we think paved the way for this tax regime. 1. The need to be a team player. Countries worldwide want big corporates to pay a minimum of 15% tax. The proposal was put forward by the OECD, and 136 countries, including the UAE, signed on it in 2021. This corporate tax helps UAE do its bit in countering big tech's tax evasion. What it also does is save the UAE from grey listing. Point number 2 may come as a shock to some of you. Remember FATF, the Financial Action Task Force that's grey-listed Pakistan? It is now discussing whether or not to put the UAE in the same category. FATF reportedly believes the UAE has not done enough to combat money laundering. If grey-listed, the UAE's investments could take a hit. Taxing businesses, on the other hand, helps it build a case before the financial watchdog. Point number 3. Corporate tax also helps the UAE diversify its economy. Ever since the pandemic struck, oil-rich countries began pivoting away from over-reliance on petroleum. Saudi Arabia, for example, invested in an Indian retail chain. The UAE, too, is exploring different avenues of income. In 2018, the UAE introduced VAT, or value-added tax, on most goods and services. Currently, branches of foreign banks need to pay 20% tax, as do certain companies in the energy sector. What changes now is that other businesses too come under the tax bracket. There is a possible fallout of this move. The UAE may lose business, especially to Saudi Arabia. Riyadh has been offering incentive to international companies. It wants businesses to shift their offices. To be fair, the UAE still has an edge. For starters, most other Gulf countries impose corporate tax on MNCs too. In Saudi Arabia, it is 20%. In Oman, it is 15%. And 10% in Qatar. The UAE is proposing 9%. What about tax havens outside the Gulf? Montenegro's tax rate is 8%. Gibraltar, 10%. Hong Kong's taxes start at 8.5% and go up to 16.5%. The UAE's finance ministry has said that the country's corporate tax regime will be amongst the most competitive in the world. It's not like upsetting businesses is an option before the UAE.
WION is now available in your country. Download the app now and get all the news on the move.